then I think it's quite clear that the way to force onboarding of a CBDC is going to be some sort of crisis, some sort of event where people will be made an offer they can't refuse, essentially. Whatever that crisis is that creates the situation where people will have, very little choice but to onboard to this new digital currency system, it could manifest in a number of ways, but regardless of how it manifests, what the narrative is going to be is that privacy is dangerous, anonymity is dangerous, specifically financial privacy is dangerous. Those are going to be the narratives that come out of this event, and that's going to be a way to force onboarding both onto digital currency that can be tracked to stop terror financing.
Central bank digital currencies, as the name implies, are government-backed digital currencies that use blockchain or distributed ledger technology. These virtual currencies are supposed to serve the same purpose as paper money and coins: a means of payment, a unit of account, and a store of value. They've also been described as a way of promoting financial inclusion and simplifying the implementation of monetary and fiscal policies. Advocates of CBDCs have argued that they ensure privacy, transferability, convenience, accessibility, and financial security for consumers and businesses, and help central banks easily implement monetary policies to ensure stability, control growth, and influence inflation. But herein lies the problem. For every advantage of CBDC, there are about 10 disadvantages that simply cannot be ignored. The first and foremost is the privacy issue. Though proponents of CBDCs argue that the blockchain ensures privacy, it does not. On the blockchain, nothing is ever truly anonymous. Every transaction can easily be traced and monitored. Central banks and the global cabal that controls them already have too much power and control over our financial lives. CBDCs will give them complete, unchallenged control at the push of a few buttons. But this is not the worst part about centrally controlled digital currencies. According to popular investigative journalist Whitney Webb, the agenda behind CBDCs is much more sinister than we can imagine. It involves the total monitoring and control of each of our activities. At the helm of affairs will be people like Klaus Schwab, the founder of the World Economic Forum, who has repeatedly declared that the global economy needs a complete reset. In a recent interview featured on The Big Picture with James Patrick YouTube channel, Whitney exposes the diabolical and true intentions behind CBDCs, digital IDs, and internet censorship. We will present clips from the interview, but before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
The man that claims to have created CBDCs is a man from Barbados named Oliver Gale. He created one of the first, arguably the first CBDC project in the Caribbean, and then went on to have a key role in creating the Nigerian CBDC, the e-Naira. So the way the CBDC in Nigeria was set up is that in order to access the CBDC, you have to have a national identification number, which is the Nigerian digital ID project. So you have to have a digital ID in order to be able to access the Nigerian CBDC. And the way they tried to get people to onboard to the CBD system was by essentially cutting off the vast majority of the cash in circulation in Nigeria. And so despite the fact that they created these conditions to coerce people into using the CBDC, the populace resists. And that suggests that the idea of CBDCs being a tool for financial inclusion, the public doesn't seem to believe that, right? In Nigeria, these people that ostensibly suffer from this identity gap, that suffer from financial exclusion, don't want the financial inclusion that they're being offered by the CBDC. They don't see any real benefit. They see it as a tool of the state. And the state in Nigeria and in other African countries where these sort of systems are being rolled out, the governments have abused these systems to go after journalists or other people and violate human rights and all sorts of things. So it's not a tool for increased human rights. It's not a tool for increased inclusion. It's inherently exclusionary, and it's a surveillance tool. So if Nigeria's tactic of, drastically reducing the amount of cash in circulation didn't work, then I think it's quite clear that the way to force onboarding of a CBDC is going to be some sort of crisis, some sort of event where people will be made an offer they can't refuse, essentially. Whatever that crisis is that creates the situation where people will have, very little choice but to onboard to this new digital currency system, it could manifest in a number of ways, but regardless of how it manifests, what the narrative is going to be is that privacy is dangerous, anonymity is dangerous, specifically financial privacy is dangerous. Those are going to be the narratives that come out of this event, and that's going to be a way to force onboarding both onto digital currency that can be tracked to stop terror financing or things of that nature. And also we have to know who everybody online is, or we have to know who everybody is interacting with these systems. We need digital ID. Okay. It's very much tied up with efforts to regulate the internet. The effort to regulate the internet, specifically in the United States, has been going on for years. Under the Obama administration, they called it the driver's license for the internet. The idea is to have a government-issued ID be necessary for you to access the internet. And in doing so, they know not just what you're posting and saying online, they know what information you're reading online as well. But the difference is, once it's directly connected to a government-issued ID, they could prosecute you for things like publishing misinformation and all of that. And there's actually been pushes from people like former Google CEO Eric Schmidt to punish people who publish alleged disinformation, and that the need that it's necessary to have IDs connected to social media accounts and to people's internet access as a means of facilitating those kinds of arrests or law enforcement activity. Well, there's a couple of reasons why I think they'd want to have private banks have like a major role in this digital currency system to come. If there's a private sector entity banking you and managing your money, it's much easier for them to bank you than the federal government. So for example, if the Federal Reserve were to do a direct issue CBDC, it would be harder for them to freeze someone's bank account or debank them in any sort of significant way, as opposed to a private company where you have, for example, precedents where JP Morgan Chase, for example, debanked Dr. Mercola and some of his executives and didn't give any reason as to why. They just said, we can no longer provide you with financial services. No questions asked. That would be very hard to do in the case of a direct issued CBDC.
Whitney believes the global elites have found a way to assuage the pushback against CBDCs in the United States. Rather than the Federal Reserve issuing a dollar-equivalent digital currency, Whitney warns that there are plans to have commercial banks issue them instead. Too big-to-fail banks like JP Morgan, Citibank, and Goldman Sachs and their very controversial executives will be in charge of the digital dollar, with access to every transaction you make at all times of the day. They will be able to decide when you can spend your money, what you can spend it on, and whether or not you should even have access to it. Instead of the financial inclusion we've been promised, there will be mass exclusion from financial services, particularly among people who don't buy the bullshit mainstream narrative. Anyone who holds alternative views and expresses them on social media will immediately be cut off from the CBDC system and stopped from accessing other services through digital IDs. It will be nothing short of a dystopic nightmare for all except the global elites, who will then have total and complete control. Let's get back to the video.
If the Fed were to do a direct issued CBDC, it would take them a few years to design, experiment, and deploy it. If you're using these existing dollar-peg stablecoins, those are already here. They're already on blockchains. And a lot of those phases that would take the Fed a few years have already been accomplished if you choose to use those. And if you regulate them so that they have to, for example, keep their reserves at the Fed, then you're able to sort of have the same kind of system, but you don't have to go through the process of creating a direct issued CBDC. China, for example, they already have their CBDC, so the U.S. is behind. So to remain competitive, they say, and have a first mover advantage, we should go with the digital dollars that are already here. So that's dollar-peg stablecoins. The banks that are involved in this new system, it's very unlikely it's going to be the existing banks we have in the US right now. And that's because just like in 2008 and more recently with the Silicon Valley banking crisis, every time there's a major financial crisis, there seems to be a major bank consolidation wave. And you have Janet Yellen, the Treasury Secretary, saying during the Silicon Valley bank crisis, in front of Congress, that they are essentially only going to rescue systemically important banks, which is a designator that Yellen can just, she essentially decides who's a bank worth saving and who's not. And this is sort of the perpetuation of the too big to fail model that we heard about in 2008. So one indication the system is being rolled out in this way is looking at the people developing the infrastructure and what type of digital currencies they're supporting. So one of the biggest developers right now of CBDCs is this company called R3 that's backed by some of the biggest Wall Street banks in the world. And they were named by Central Banking Magazine as the CBDC Partner of the Year last year. And then they're developing a litany of CBDCs for countries all around the world. But that's just one part of what they do. They have this thing they call a digital currency accelerator. And the three types of digital currencies R3 develops are CBDCs, stable coins, and tokenized deposits or deposit tokens. And some banks in the US have already rolled out deposit tokens. Citigroup, JP Morgan. JP Morgan actually had a research paper out last year about how CBDCs are inferior to deposit tokens and how deposit tokens are better. So Oliver Gale, who defines himself as the founder of CBDCs, has more recently co-founded a company called Fluent Finance. What Fluent Finance is they attempt to create a trustworthy dollar-pegged stablecoin that they call US Plus. And it's sort of framed as an answer to dollar-pegged stablecoins like Tether that have been controversial for having opaque reserves. So the whole thing about US Plus is having trackable reserves in real time and all of this. And so it's an attempt to create a very extremely trustworthy and backed by a consortium of banks, a bank-led US dollar-pegged stablecoin. So if the inventor of CBDCs is moving into stablecoins, he probably knows that there's something there.
So what first got you interested in this cyber pandemic?
So not that long after the COVID era began and the World Economic Forum started to be looked at, scrutinized more, particularly by independent media, people had noticed the overlap between the World Economic Forum and Event 201, for example, in the COVID crisis. And so during the COVID crisis, people paid a lot of attention when the World Economic Forum launched its cyber polygon simulations that were about cyber attacks. And during that same period of time, you had Klaus Schwab, the best known face of the World Economic Forum, saying that after COVID, there would be some sort of what he called a cyber pandemic that would have consequences that would make COVID's impact on society seem relatively insignificant by comparison. I think the whole idea of a cyber attack is sort of contradictory to a lot of the stuff that was pushed for during the COVID era, where we were pushed increasingly out of the physical world into the digital world. And then the digital world is also under attack from cyber attacks and what have you. So I think ultimately the goal is to use cyber attacks as a means of centralizing control of the digital world.
Whitney's interview touches on a key topic that is becoming more prominent in discussions about the future of money: the gradual obsolescence of paper currencies. CBDC critics like Whitney are concerned that CBDCs will not offer the same financial freedom that decentralized cryptocurrencies do, particularly as CBDCs can be subject to greater governmental control, potentially allowing for surveillance and censorship, which could undermine individual privacy and autonomy. What are your thoughts? Do you agree with Whitney's concerns about CBDCs and the demise of paper currency, or do you see potential benefits in this digital transition? Please share your comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.